What you know about chilling in the back of the bug? What you know about rolling the back of the bug? We pull up with pulls in the back of the bug. Them honeys getting all lit in the back of the bug. In the back of the bug, in the back of the bug, yeah. Just imagine the back of the bug.
Yo, what's good, guys? Governor Gus, Trading Got Me. Today's topic will be focusing on the Asian range and correlated pairs. Well, not really positively correlated pairs, but negatively correlated pairs. So basically how to use the Asian range and negatively correlated pairs to get daily buys, if not to be more specific, entries, and understanding where the market is according to the negative correlated pairs of the currency you're using. So I'll be using Euro USD to be more specific. And its negative correlated pair being USD and Polish Zloty. I think it's called the Polish Zloty or something like that. But anyways, so I'd say if you had to put a percentage of how they don't match, these two would be at around a percentage of about 98%. So that basically means they 98% negatively related. Literally, bro. That's the closest you can get to 100%. So whatever movement Euro USD does will initially be the opposite in the USD Polish Zloty, something like that. But anyways, let me just hop right into it. If you have watched my previous video, you'd be familiar with the Asian range, which is the time slot between 2 a.m. until 7 a.m. This being also South African Standard Time. And then what you do is just take that period of time and the high and low in between that period of time, and that would be your Asian range. The analysis for the date that I am doing is actually today, the 28th of November. So you pretty much just run the analysis for both. So you'd also have to find out the Asian range for the correlated pair or negatively correlated pair in this essence. And that would also be from 2 a.m. till around about 7 a.m. And from there, you'd also just need to get the high and the low. And that right there would be your Asian range. Let me just secure everything. And then, as usual, we need to outline so the people know what we're talking about. Let me clicky first. Okay, so that right there would be the Asian range for the Euro USD, and this right here would be the Asian range for the correlated or negatively correlated pair, USD Polish something, bro. It's Polish Zloty. There's it right there. Polish Zloty. The Polish Zloty, bro. Whatever that is. I know it comes from probably Poland, but the Polish Zloty, bro. But anyways, and then I'd say this is where it pretty much gets easy, not there. Sorry, that line was just there. Pretty much now, all you do is just label out the same characteristics just label out all the characteristics that you would find in the Euro USD, and do the same with the USD Polish, sorry. So what I would do is usually use the Fibonacci tool just to understand my levels of retracement within the Asian range. What's going on, bro? Okay, and then after setting my Fibonacci, I would then understand that today's market was to some extent ranging, as it was coming back, retracing to the 50th percentile, and then actually bouncing off every single time. But we just need to label this part out here. Let me just put that in red. So, as according to the movement, we can see Euro USD went out, retraced back in to the 50th percentile, shot towards the Asian range low, penetrated, broke it, and then rejected back, retraced until the 50th percentile before it finally again broke the Asian low with a lot of penetration and a lot of volatility. And then after that, we could say consolidated, but here I'll just say there was a lot of price fixation. If not, there were imbalances. People are probably trading a lot of up and down positions, for those who want to put it like that. But as you can see, price retraced back into the Asian range, went to the 50th percentile, and then shot out again. So basically, price bounced for a bit, went to the Asian low. After getting to the Asian low, it went back, retraced. After retracing, it shot out of the Asian range, and then retraced back into the Asian range, and then finally again shot out the Asian range. And then I'd say the key characteristics would be the total opposite and the negatively correlated pair. So once again, the Fibonacci, just to see the levels of retracement, and after there we can see that price went up, drove back down, which was similar to the Euro USD in terms of opposing movement, and then it went for the Asian high. After taking out the Asian high, it retraced. After retracing, it went, took out the Asian high again with a lot of volatility this time, and then retraced back in to the 75th percentile, which isn't really a lot of retracement as compared to the Euro USD. But then once again it shot out, and as you can see in this chart, the market is actually going towards the buy side, and for the Euro USD, we can see that the market is actually going towards the sell side. I would say the difference here is that the Euro USD market seems to be ranging a little bit more than the USD PLN, the polyzotly. And from the characteristics though, you can actually see that their movements were similar to some extent, like around about there. Let me just put that in a different color. Around about there, and also there, where we had an up for the USD pole. That's what I'm gonna just call it as a matter of fact, because that polyzotly is too long, bro. The USD PLN, you can see it went up. Sorry, you can see that it went up, and after going up, you can see that it went back down. But for the Euro USD, we can see that it went down first, then went up, and then after that, it shot for the Asian low. But in the opposing currency pair, sorry, excuse me, had some gas inside there, man. That saliva tried to choke me out, bro. But yeah, in the opposing currency pair, we can see that it actually shot towards the Asian high rather than actually shooting towards the Asian low. And then from that, we can see retracement happened again, where it penetrated right back into the Asian range. But also in the Euro USD, it did the similar thing. It broke back into the Asian range, but after breaking back, it literally shot out again of the Asian low. And same with the USD polish. shot back out of the Asian high as according to its Asian range. So I'd say this is pretty much the basics on how to use correlated pairs, on how to get a daily bias, if not, to be more specific, direction of the market you trading in, if it is a currency pair per se, or if it is a forex related market. But either way, there are some indices that do also have correlated pairs that do work with the positive and negative relation. If not, pretty much everything does have a correlated pair, to be honest. You just need to figure it out. But I'd say the ones that work the most are the ones with the most either negative influence or the ones with the most positive influence. So I'll be looking for either a negative relation of anything above negative 95% for me, if it has to do with the negative correlations. And then if it's going to be a positive correlation, I would want anything above 90%, to be honest, because that would be your your GBP USD, for example. For the Euro USD, I know that's probably at around 96% correlation, positive correlation, and then the USD Polish zloty being a 98.5 negative correlation as according to the Euro USD. But as you can see, movement isn't really the same, but the characteristics will literally show you where the market is moving as according to the correlations. Like we can see here, this one broke the Asian low, and the opposing correlated currency broke the Asian high. It retraced back into the Asian range. So did the Euro USD, and after retracing, it shot out again. So it broke the Asian low, sorry. And then the opposing currency, you can see after retracing, it broke the Asian high once again. If not, we can carry on with the whole thing again, where it retraces back in and then breaks the Asian low again. And this can also be seen around about there, where it retraces back in and also breaks the Asian high once again. So with that said, I'd say that's pretty much all the basics with the correlated pairs. If not, there is more information that I will be providing in the next videos, but this is how to use the Asian range and how to use correlated, or more specifically negatively correlated pairs, to initially predict the market or get a bias for the day or for the week, depending on how you use the strategy. But anyways, you know, it's all for the bag. Chasing the money, giving the gas, trading got me. Peace out.
What you know about chilling in the back of the bug? Some money in the back of the bug. Hustling in the back of the bug. Shooting that shit in the back of the bug. In the back of the bucky. These niggas is hosting a party. We under these hammies. It's getting too rowdy.
I could never crash out. I could never crash out over no bitch. Fuck is you talking about?